Hello and welcome to the US CPI data preview from ATFX. My name's Nick Twidale, I'm the Chief Market Analyst. And today we're going to be running you through what is probably the premier macroeconomic calendar event of this week. But before we dive into that, we'd have to look at what's been going on in the markets recently. And of course, what we've seen is a sea of red across stock markets. We've seen some real hard hits come across the board, and that's really affected global financial markets. It's affected the currencies. And as we move forward today, what we're going to look at is we're going to look at what's going to come from the data and what possible moves and trading opportunities we can see across currencies and, of course, across gold, which is one of our major products. Before I dive further into it, please do hit subscribe on your buttons if you haven't done already. We will keep you up to date on all that's going on in financial markets. So here we go. CPI data, probably the most important inflation data across any jurisdiction, and certainly for the US economy, and certainly at this point in time, it is one of the big numbers that everyone is focusing on. Recently, we've seen rate cut expectations really pulled in across the curve in the US. If you spoke to me about 4 or 5 weeks ago, we were looking at the first rate cut coming in September. Now we're firmly pricing in a rate cut in May. That will be a 25 basis point rate cut. But if things do start to curtail as they have done, and last night we saw a 4% decrease for the NASDAQ, then you could see some pressure on the Fed to bring those rate cuts in earlier. But they can't do that if inflation continues to remain high. And that's the print we got last time from CPI. So CPI data. 2 main data prints that will come out on Wednesday in the US. The month-on-month headline figure for the CPI and the month-on-month headline core CPI. Month-on-month expected 0.3, nice and easy for all of us this time, 0.3% increase for both those figures. The year-on-year, I believe, is coming at 2.9%. So still a little bit sticky for those out there, including Jerome Powell and the Fed. We did hear from Jerome Powell at the end of last week. He stuck to his guns that he's in no hurry to cut rates, but yields again took a big hit last night. So those rate cut expectations are coming in. Now we're going to duck over to some of our charts and see whether some trading opportunities across the majors and, of course, in gold as well. So we're focusing on the daily charts here because this impact and because of what's going on in the market could have much longer term impacts. Now, here's the euro. Last week, hanging around these levels, just under 105, not too much going on, relatively quiet, and then bang, Germany came in with a huge stimulus package and jumped us nearly 4 big figures. Well, it did take us 4 big figures. Huge move up in the chart. We've consolidated above that 108, kind of that 108, 109 level. The opportunity for big moves now, if this CPI comes in away from expectation, is huge. Obviously, a downside move will lead to some US dollar selling, increased expectation of right, and it could take us through these highs. This isn't a great chart level now, even though it's on the dailies, but you will see a break if we pass through these highs. It will take us back up to this much longer term resistance that comes in just below a 111 figure. Conversely, if we do get another hot print, expect the dollar to get bought, euro to get sold. And we could move back down into this range. Now, how far we get, because euro is still bid on those dips after the move from Germany, not too sure, but certainly first support will come in around about this 200-day moving average at 107.21. And then we're looking all the way down back to sort of 102, just beneath 102. In fact, lows 101.42 for that annual low for 2025. So there's the euro. Plenty of scope for movement. The technical level on the top side is probably your favorite for those break traders. And we could see that move back up to that cycle level at 110. I'm going to move over to the cable now. Also seen some big moves in cable. Moved on the back of that euro move. Moved on the back of the dollar coming off. This could really change things if we do see. So when I go back to those numbers, I should say I'm looking for probably a 0.2 difference in that month-on-month number, or 0.2 in that year-on-year number. So if we get a 0.5, if we get a 0.1, expect these moves to come through in the daily charts. We'll probably get 50 or 60 points if we get a 0.1 differential. You really want 0.2 or move. Higher than that, obviously, the bigger we'll see a more exacerbated move. Very similar chart pattern sitting up for cable. A weaker print should see a break of these levels. I'll bring these levels into a little bit more clarity for us here. Topped out around about 129.50 a couple of times, just underneath 129 the figure. A weaker print, a 0.2, a 0.1 should see a challenge of these levels and a break. This time we've probably got the propensity for a bigger move up towards that sort of 132 region, 132.50. Same again, downside that we had in the euro, stronger number, a 0.4, a 0.5, a 0.6 even. That'll see us back into these ranges. Initial support will come in around just underneath 128 the figure. Then we're probably looking down to around about 126 the figure. So plenty of trading opportunities coming up. Now here is probably our best mover and shaker, as always, dollar yen. It's been flying around. We are down on a 146 big figure. Now a lot of that's had to do with the tariff threats, geopolitical concerns. We've seen yen buying across the board. I've left this, once again, I'll bring us in for a bit more clarity on levels. I've left this former support trend line because it was a fantastic trade. Took us down very swiftly, well over a couple of big figures. We did get a bounce back up, and then look at us here, sub 147. This is a strong support line coming in here, just underneath 145 to figure. CPI, if we're around about these levels, stronger number could take us up to 150 fairly sharpish, and we know how fast dollar yen can move. A weaker number, a 0.1, a 0, should take us down to sub 145 fairly swiftly, challenging these levels. If it coincides with more risk off, with more stocks going down, we could see a breakthrough there, and we're on a fast route down to these sort of low 141s. Could be a very interesting trade. Dollar yen would be one of those that we could get some major moves out of. Final, not currency, but product that we're going to go to, gold, one of the biggest trading products that we've got. Everyone looking at gold. We are still up over the longer term near those all-time highs. We dipped down about 0.75% now. We're underneath that 2,900 level. For the first time for a while, we've actually got a little bit of resistance trend line coming in from the top side. That comes back from mid-February. Resistance coming in now around about this level. Please sharp for me. There you go. 2921, around about 2922. Support coming in down here, but we probably look at initial support to come in around about this level, low 2832, 2830, bring it up to 2850 if we were to draw a chart line in there, which only have 1 or 2 points in there. But interesting to see how things go with this. Initially for gold, we will see the dollar come into play. So stronger, we get that 0.5 print, we get that 0.6 print. Gold will shirk down to the downside. We get the weaker one, it will look to take on and challenge this resistance. What we've had recently with US data, though, that tends to be short term. Gold, as you can see from this longer term trade, has been bid on dips. Now, a lot of gold buyers in particular, because it has done so well over the last few months and years, have used those dips to buy into. So a stronger number, that 0.5, that 0.6, has seen buyers come in, whether it comes in this time. So short-term traders, get on the back of that. Bigger one, look for gold to come off, especially if it does see a dramatic turn in those US yields where people want to get that swap, that ability to hold those dollars and get paid for them overnight. So there we go. Plenty of trading opportunities for this CPI. It comes out Wednesday in the US. It will be huge because it is the main fundamental data that we're getting this week from the US. We have PPI on the next day, but really CPI supersedes this. There's not much else coming out. So when there's not much else on the calendar, massive investor focus for it. Huge trading opportunities. As always, if you need anything from us at ATFX, please let us know. Have a great trading opportunity and good luck out there. Thank you.